Hello, everybody. Welcome back, business leaders. Happy Friday. Today, we're going to be tackling a vital aspect of business finances. We're going to be talking about accountable plans. These are crucial for corporations, especially for those in the coaching, consultant, and service industry to manage employee reimbursement effectively and, of course, enjoy tax benefits. But before we get into this lovely topic of accountable plans for corporations, let me introduce myself. So my name is Shane Harris, and around here on these social media streets, I'm also referred to as Shane the Negotiator, and I help coaches, consultants, and service providers who are, overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. That is what I do, and that is who I help. So let's get on into this lovely topic. So over the last two sessions, so last week, which was Monday and Friday, we spoke heavily we started off with Schedule C's. So I went over the step-by-step guide on how to complete and read a Schedule C. And then we piggyback off of that on Friday when we spoke about the home office expense form 8829, which goes along with the Schedule C for businesses who have a home office, and you can deduct certain expenses like your rent and your mortgage and your utilities, yada, 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 right? So now we are going to roll all into accountable plans. And if you guys are anywhere except YouTube, Fridays only streams on YouTube. So you did not see that form 8829 where we talked about the home office expense if you're on Facebook or if you're on IG. So you have to go over there to the playlist on Facebook and the 2024 playlist, and you can catch the replay on not Schedule C's because you saw Schedule C's, but catch the replay on home office expense. So everybody else that already saw it, you're all caught up, and we're going to continue on with accountable plans. So what exactly is accountable plans? An accountable plan is a reimbursement system that meets specific IRS criteria, allowing businesses to reimburse employees for work-related expenses tax-free. The plan must have a business connection, require substantiation, and return any excess amounts. So before we get into the rest of this, so we spoke heavily about that home office. So if you have a corporation, meaning you took the election to be an S corporation or a C corporation, you have Inc. somewhere in your business name, you cannot take the home office expense on that form 8829 when you file your taxes on that Schedule C. Your taxes do not go on a Schedule C. If you are a corporation because you have that S Corp election or that C Corp election, or you have it in your business name anyway, you are going to file your taxes on either Form 1120 or 1120S, which stands for the S Corp or the C Corp. Okay? So with doing this, there is no home office expense on that form. You take your deductions for home office as an employee reimbursement, or what's called an accountable plan. Okay, so to pretty much do this, you would have to set up an accountable plan for your business. If you have not set one up as yet, or you don't know what the heck I'm talking about, after you watch this, then you go ahead and schedule some time to sit with me, and I can assist you with getting your accountable plan set up in place so that you can start getting your home office expense deductions tax-free. Okay, so again, as a corporation, you cannot take that home office expense. So you would need this accountable plan. So accountable plan, as I said, it's an employee reimbursement plan. Because you have a corporation, you can be both the employer, yay, and the employee, double yay. So you get the best of both worlds. So you, as the employer, you get to create an accountable plan for yourself and all of your other employees. And then you, as the employee, get to reap the benefits of that with the other employees. So, of course, if you are whether you're the sole person working your business or you have other employees in your business, whatever the plan says for you, it goes for your other employees as well. So when you create this plan, you're going to have to do this, create it and updated annually. So at the start of the year, I suggest in January 1st, sometime within the first 30 days, you have your annual meeting, because if you're a corporation, you already know you should be having annual meetings. Now, many of you are single member in your business. You have a S corporation, or you may have a C corporation, but you're the only one in your business. You don't have other shareholders. You may have some employees, but you don't have shareholders. Whether you have employees or not doesn't matter. You're the only shareholder. You don't have any other partners. You still have to have those corporate minutes. So you literally would get on and schedule your meeting, and you are the secretary, you are the director, you are the CEO, you're everybody. Your name is going to go in every position because you are the only one. So you're going to have this meeting. You're going to write down what the meeting is about, which is talking about accountable plan and the vision for your business for that year, whatever you want to put in your meeting, but we're talking about accountable plans. So of course, then you go ahead and create this accountable plan. So I'm going to go through the rest of this, and then we're going to come back to how you as a single person can really implement this. As of right now, we're just going to talk about accountable plans on a whole. Okay. So let's do a case study of Jordan Consulting Firm. So let's look at Jordan's experience. So he runs JTC Consulting, a business consulting firm. Previously, employee expense reimbursements were taxed, adding both the employee's tax burden and the company's payroll taxes. Of course, it added to it. So after implementing an accountable plan, JTC Consultant was able to reimburse travel and meals expenses for client meetings efficiently. This not only boosted employee morale, but it also reduced the overall tax liability for both Jordan's firm and, of course, his employees. So setting up the accountable plan. So to set it up, an accountable plan involves defining clear policy. So you have to write out exactly in the details what this policy is going to be about. This includes what constitutes a reimbursement expense, how employees should report these expenses, and the timeline for reimbursement. So it's important to have these policies in writing and ensure that they comply with the IRS guidelines, of course. So when you're setting it up, as I said, you have these annual meetings for the corporations every year. I recommend at the start of the year, you have those meetings and you talk about one of the things you're going to talk about, because you're going to talk about many things in this meeting at the start of the year. One of them is this accountable plan. So you're going to list out in there what the accountable plan is going to reimburse. So as we talked about home office expense deductions, you want to be able to give your employees and yourself back for what you're personally spending in your business, because you have that home office. You are personally paying your mortgage, paying your rent for that home office, paying the utilities for that home office. So you want to have this within your accountable plan. So you're going to put in there, you're going to give back so much amount of money every single month or per quarter, however you decide to do it in the accountable plan. I recommend every single month because that's generally how it works to be in compliance with the IRS. So every single month, based on a percentage, I'm going to put in there that I'm reimbursing my employees. I'm just going to make up a number, $2,000 a month for home office expenses, that they're things that they're spending for the business outside of the actual business. So once you put that there, you're going to put the amount and the time frame in which they have to submit it, or you, if you're a single member, which you have to submit it to yourself or submit it to the business. So you will come up with a spreadsheet. And of course, if you're working with a professional, we actually help you. We give you the spreadsheet and we actually help you do these accountable plans so that you don't have to worry about it. If you have monthly service, at least working with me, you don't have to worry about it. It's going to be ongoing with monthly service. It's a part of the service that we provide. So you're going to reimburse the employee. So the employee or yourself, you are going to fill out the form and put that you spent $1,500 this month in your expenses for your home office. The total amount was $1,500, but the reimbursement is up to $2,000. So anything up to $2,000, they can submit. You bid the business go into approves it, and the employee give them money. So you don't add this to their paycheck, because if you add it to their paycheck, it's going to be taxed. So you have to actually give them this money because it's tax free. So you can send them, direct deposit or however you want to do it, but not recorded as a W-2 income. So if you're going to run it through payroll, it's going to be tax exempt. It's tax free for this particular portion because you're giving the employee the money back. So you have a time frame. So within the accountable plan, when you have the meetings, you put down in there when the employee have to actually, or yourself, submit this. So you created in January 31st, from January 1st to the 31st, that's a month. So you may say the employee have 2 weeks after the month ends to submit this for the previous month. So from January 1st to January 31st, that's the month. So they will have up until the 15th of February to submit their documentation to show how much they spent within their home office or anything that was business related that they spend personally with their own funds and the business did not pay for. So once they submit this to you, whoever is in the finance department who is managing in your accountant or yourself, whomever is managing this, they're going to look at it to see that the expense that they submitted, if they are approved. So within your accountable plan, you will list out the approved expenses that you're going to accept. So if they put purchased new outfits, that may not be in your accountable plan. So you may disallow that and the employee is not going to get reimbursed for the purchase of any clothing that they may have purchased. Even if they purchased it because they needed to look good on social media because they do videos for the company, you may not have placed that into the accountable plan, so they can't get a reimbursement for that, nor can you. You have to put it listed out as detailed as possible, what is covered, and you may put some examples of what is not covered so the employee have some examples. Once you review it and you see that they have $1,500 in approved expenses, then you pay them out that. If they have over $2,000, well, you're only giving them $2,000, up to $2,000, because the plan states up to $2,000. If your plan states $15,000, then you give up to $15,000. I mean, whatever the amount that you place in there for yourself as the employee, you have to put that same exact amount for any other employees that you work with. So I know I'm saying this because some of you you're the only member, you're the only shareholder, and you by yourself right now. So you might put a high amount for your employee reimbursement or your accountable plan because you're the only one and you're getting benefits of it. But the minute you hire someone else, and now they are also going to be submitting for their reimbursement. If you're giving yourself $15,000 a month for up to $15,000 for accountable plan reimbursement, you have to do the same thing for every other employee. So when you create this plan, make it reasonable for yourself and for everyone else, because all the employees have to be the same. You can't give yourself more and give someone else that comes on staff that's doing the work, you can't give them a less amount because you will be in trouble. That does not fall under the IRS guidelines. So you have to be careful with that. So the benefits for employees and employers. So for employees like Jordan, these plans provide a tax deduction for the reimbursed expense. And for employees, they ensure reimbursements are not counted as taxable income. As I mentioned, this mutual benefit can significantly enhance job satisfaction and, of course, financial efficiency. So when you go to file your taxes, as I said, as someone who have a home office, because they are doing Schedule Cs, they take the home office expense on that Form 8829. For corporations, you may have a home office, you can't take it there. You would have an accountable plan and get your employee reimbursement. So you actually get a little bit of a better deal than someone who has the home office expense, because they have to wait until tax time to get theirs as a deduction. However, for corporations, you get that cash money the next month. You get it back the next month. So for example, let's just say I have my home office and my corporation has the accountable plan set up. So Profit First Taxes, me as the employee, Shane Harris, I work in my own business. I have my accountable plan. I'm just going to make up a number, $1,000. So every month I calculate up my mortgage, my expenses like my utilities, the phone, whatever it is that I use for profit. Well, not the phone, because the phone the business writes off. Anything that the business does not write off, I can calculate up if I'm spending it out of my own personal funds for the business expenses. There are some of the apps that I'm using for social media that my business is not paying for because I'm using my Apple ID on my personal phone to pay for it. That falls into the employee reimbursement. I can submit that in. So I submit $850. My plan has up to $1,000. So Profit First Tax is going to give me back my $850, even though I have up to $1,000 I can get back. But if I don't submit in $1,000 worth of reimbursement, the company can't give me $1,000 back. It can only give me up to what I submit. I submit it in a timely fashion up until the 15th of February or whenever that time comes that I set for my business, and I get my reimbursement back. I get that money direct deposited to me, or for myself, I transfer the money to myself within my books and my accountant. I code it under the accountable plan or employee reimbursement or contribution plan, however that I wanted to word it in there, so that I know come tax time, what is what. The business gets to write off that entire amount, and me, the individual, I don't pay any taxes on this money. This is a nice way to pay myself back, and my business paying me back for the work that I'm doing outside of what the business is paying for. Okay, I hope you guys understand that it makes sense. And the same, it works for your employees. Let's just say I had 3 other employees that work with me, and they also have a home office expense, and they're doing all of these work in the business and things like that. In the employer reimbursement plan, I said they can write off their home office expense and any others, if any apps that they're purchasing. So let's just say I have people doing my social media, or I have other things that they're doing in my business that requires them to use certain apps that they are paying for. My company can reimburse them back for that amount up to $1,000, because that is the amount that I allotted for myself. So I have to also allot it for my other employees. Now, keep in mind, if they are 1099 or independent contractors, this does not apply to them. You do not have to give an employee reimbursement plan for independent contractors. That's for them to set up on their own, either do their own home office expense, or if they happen to be a corporation but they're 1099 and in your business, then they can set up their own employee reimbursement program for their business. But you do not have to include the 1099 contractors. These are only for employees, W-2 employees. So you have to be a corporation, and you have to be paying yourself on payroll to do this. Okay, so documenting and substantiating evidence. So the key to the plan's success is documentation process. And we speak so much about documentation. Most of the topics that I speak about goes back to documentation. Record keeping, record keeping, record keeping. You're always going to hear me say that, because that is what's needed in almost everything that you do in your business. Employees must substantiate their evidence with receipts and detailed records. They must show you the evidence. That's what substantiate means. They have to provide the evidence. If they don't give you the evidence, then they don't give you the reimbursement. They can't get the reimbursement back. The same for yourself. You're the only one in your business. You are submitting this to your company for you. You have to have receipts for this. So have a storage area where you have it to place into the business folder, so that if need be, the business can always go back into that, and it's within the business books and the business records. Okay. For example, in Jordan's case, his team uses a mobile app to upload the receipts and log mileage for client visits, ensuring all expenses are tracked and accounted for. So if you're using QuickBooks, I know there you can directly email your receipts directly into QuickBooks. You can use whatever your pretext is for your email address, .qbo.com. That goes right into your QuickBooks. Of course, you would have to set it up inside of QuickBooks. So let's just say my email address for my business is pft@profitfirsttaxes.com. Well, it's going to be pft at qbo.com, then that it goes right into my my receipt goes directly into my books, and all my receipts are there. So the pictures that I take in, whatever mileage that I may have, whatever receipts from what I purchased from the store, or if I'm submitting my utilities or my mortgage, whatever. So of course, just to let you know, you're not writing off the entire amount of your mortgage and all your utilities. This is based on the percentage of your home office. So it's not the entire amount for your entire house. You are submitting what the portion is for the home office. So let's say your home office is 30%. So if it's $1,000 worth of expenses that you're submitting, it's 30% of that you will be able to get as a reimbursement, because that is what your office space is, 30% of your home. So instead of $1,000, it would be $300 would be your reimbursement. When I said $1,000, or when I gave the other example for $2,000, that is if based on the 30% of your home office or for your costs, it added up to $1,000 or $2,000. It could be less than that. So $3,000 or $300 or $500, that's more around where it would probably be for your business, or it could be a little bit more. Okay, so common pitfalls and how to avoid them. So one common mistake is failing to adhere strictly to the rules, which can result in IRS reclassifying reimbursements as taxable income. So Jordan, he avoided this by conducting regular training sessions for his team and ensuring everyone understands and follows the guidelines for accountable plans. So you can put this into practice and say every quarter that we have a meeting and we discuss what this is all about, so that everybody understands what's going on. When you do your minutes, you do your minutes every quarter, because we can talk another time about the minutes, the annual and quarterly, and what you should be doing with that. I can probably do another session on that at some point in time. But every quarter you can actually meet and have your quarterly meetings. And this is one of the things that you can talk about, that employee reimbursement plan. And of course, if you have other employees, they should be in the meeting as well, so that everybody is aware of what the requirements are, how they need to submit it, and how in the timely fashion in which they need to do it, and how much they should be submitting up to whatever the amount is. Okay. So here's another case study. We're going to talk about Taylor's coaching business. So consider Taylor, who runs a career coaching services. By introducing an accountable plan, she was able to reimburse her other coaches for their home office setup and, of course, their online training tools. This not only supports her team in delivering better services, but it also reduced her business's taxable income, demonstrating the plan effortless effectiveness for service-based businesses. Now, this plan is not only for service-based businesses. As I said, I have product-based businesses as well. And some I have a hybrid, a combination of service and, of course, product. So if you're e-commerce, this would also apply to you. You can have an accountable plan set in place, because most of my e-commerce clients, they do have accountable plans in place, because some of them are corporations as well. So it is for any business that is a corporation. You can set up these accountable plans for yourself and your other employees. So I hope this makes sense, and I hope you guys really understanding this. So in conclusion, accountable plans are an important tool for corporations, especially in the service industry. Again, it's not only, I'm just mainly speaking about service-based right now, but it can also be for product-based, like e-commerce. By implementing and managing these plans effectively, businesses like JTC Consultant and Taylor's Consulting Services can achieve tax efficiency while supporting their employees. So again, remember, once you submit the employee or yourself submit the documentation for the accountable plan and you receive your reimbursement, the business can write this off 100%. And you, as the employee, you receive the funds tax-free. So imagine getting, and let's say it was $1,000 a month that the business was giving you back in reimbursements. That is $12,000 a year you're getting in tax-free money from your business, and your business is 100% writing off that $12,000. So imagine writing off $12,000 for yourself, $12,000 for one of your employees, and $12,000 for a third employee that you have. So that's three different employees, including yourself, writing off $36,000 a year in employee reimbursement. And the employee, including yourself, you're each getting $12,000 in tax-free money that you don't even have to worry about. So that sounds like a sweet deal, doesn't it? And I hope you guys set up your accountable plan. If you have not set your plan up, or if you have one but you're not quite utilizing it in the best way, see me, reach out to me, click the link that I'm going to have in the description, and schedule some time with me as soon as possible. We're in January now, where lots of things can start getting implemented. So if you didn't implement it before, or you have implemented, but you need to make sure that you're having in everything, all your dots, or your I's are dots and your T's are crossed, and everything is where it needs to be, schedule some time with me so that we can discuss this and make sure that you have your plan set up correctly. Of course, it'll be for a small fee. It's not going to be for free, FREE. It's going to be for an investment for me to help you to do this. Otherwise, if you think you can handle it on your own, you can watch my YouTube videos and have at it. So some teasers for the next topic that we're going to be talking about. We're going to get into itemize or standard, making the smart choice. So it's going to be a crucial decision for every taxpayer, whether you're an individual filer or you're a business filer. Join us to understand when and why to itemize deductions or opt for the standard deduction. So in closing, thank you for tuning in. If you found these sessions helpful, please like, share, and subscribe to my YouTube channel. If you're on Facebook, on IG, and everywhere else, please follow me. Like the content, share the content, drop a comment, and let me know how is this benefiting you. Let's start a dialogue to get people having conversations about these topics. I know many of you are watching it and you do not like, share, or subscribe. You don't follow me. You don't do anything. And if you just watch it and you don't take any action on it by following, liking, subscribing, or whatever, the algorithm is going to be limited to where it sends my information. So if you want to help me out, which I'll be greatly appreciated if you do, like, share, comment, do some type of action when you watch it, so that the algorithm pushes it out so that more people can actually see this content. Because even if it may not be beneficial to you today, maybe it's going to be beneficial to you another day. And maybe today you can help someone by sharing this content. So thank you again for tuning in. And until I come back with that next business tip or tax tip or whatever tip, I hope you guys enjoy the rest of your day, and I will see you in the next one.